What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is February 17th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to start by asking one big question. Did you buy into the relief rally? Did you buy into the euphoria and optimism that has been persisting in the crypto space over the past couple of weeks? Well, if you did, I think you need to watch this video, because in today's video, I'm going to be talking about all of the vital signs that Bitcoin is giving, as well as the key macro signals that this is a mere relief rally, not the start of a new bull market. And on top of that, why it may be time to start taking chips off the table if you've made some profit along the way. We're going to be diving into all this and more as we go throughout the video. If you guys happen to enjoy it, one of the best ways you can support the channel is by dropping a like and leaving a comment down below as to your thoughts on what we talked about in today's video. So let's go ahead and kick off the rambling. All right, I want to go ahead and just start by talking about why we think this is a relief rally by simply analyzing Bitcoin's price, its volume profile, and the kind of patterns that we are seeing here. We first off need to understand that with every single relief rally, the idea is to trap as many traders as possible. Institutions drive the vast majority of the weight and moves when it comes to Bitcoin, when it comes to equities, and because of this, we need to understand the dynamic of how institutional investors make money. They make money by you FOMOing in. They make money from you fudding or essentially selling at a cheap discount valuation, similar to a lot of people who might have sold back around 14K during the past correction during FTX's collapse versus where we sold around 24 to 25K during the previous relief rally. Now, I generally want to emphasize this point because as we've made the biggest move here, around 63%, the biggest move off of a relative low in the bear market, a lot of people have started to feel euphoric. A lot of people have started to feel the FOMO if they've been on the sidelines. And a lot of people who are either holding or looking to buy are convinced that this is the start of a new bull market. And on top of that, they're even more convinced, not only because of the dramatic price moves that it's had, but on top of that, the fact that we deviated here above the 200-week moving average. Now, this has been a huge sign for a lot of people to confirm that we are in the start of a new bull market, that it is time to get euphoric. Start betting that we're going to go back to 60K, maybe even hit that target of 100K because the Fed is done and it's going to pivot. Well, we'll talk about that topic a little bit later on when it comes to the macro data, but more specifically here, we need to talk about the dynamic about how institutions utilize this thought process. They think in the mind of a retail trader and basically direct the market in the opposite direction. At that moment of peak euphoria, where I've started to get a ton of messages and people reaching out to me, whether it be from the Dash Report discussion group, fellow investors, and even business colleagues that I've known in the crypto space for a long time, starting to say that they're getting the FOMO, they're starting to feel it. And folks, I gotta tell you guys, I think another thing is coming. If you don't see the daily rejection candle that we got here at the 200 week with a clear fat rejection, a tall wick shooting down the vast majority of those gains from yesterday, taking us down here back towards $23,500 as a sign that the relief rally is likely over, well, give me some time and I might be able to convince you otherwise. The price action alone from yesterday is not only really concerning to see such a fat move to the downside, but on top of that, the volume profile says everything. I know a lot of people have been drawing comparisons, so to speak, to the overt relief rally we had off of the lows of the bear market in 2018 and 2019. A lot of bulls are chasing off of this concept that it's going to be exactly the same as the last bear market. It's a textbook example. Well, if you just simply take a look and want to try to make that case, take a look at all of the major candle moves similar to what we had the prior day comparative to yesterday's price action. We can see that anytime we got those 9, 10%, 15% moves, the volume profile was absolutely astronomical comparative to the average, out of the comparative average of that accumulation channel, right? So we need to, again, analyze that volume profile to see if we're really getting institutional buyers. And what do you know? If you take a look at the BTC USD or Bitcoin dollar index, which aggregates all of the major spot exchanges, this is what we want to analyze. We don't want to follow the futures volume. We don't want to follow derivatives contracts. We want to find whether or not people are buying real spot Bitcoin. That's what matters. That's what determines price for the futures and derivatives markets. Well, if we take a look at the overall index, the volume for the other day when we got that near 10% move in Bitcoin's price, pushing us up to new relative highs since back in August, it was abysmal. we had practically no volume. You can see here at the bottom end of the profile, on the volume profile, that this was nowhere near what we had back in the early part of January. And not to mention, looks like any given trading day during this general ranging period we had in the early part of February. And people are convinced that this is the kind of buy-side activity that's going to drive a new bull market. Now, I want to go ahead and accept one thing here. Price is obviously high here. It's up towards its 200-week moving average, roughly speaking. And yes, the bulls have been on the right side of the trade since back in January. Definitely say that and admit it. And there's no doubting that price is where it is. But we need to ask ourselves something really important here. Who are the buyers who are buying this rally, who are driving price up to this range? Well, of course, there are definitely institutional traders, short-term traders, people who do have a lot of that weight here, but there's also a lot of retail volume, and there's a lot of people who, again, have that excess liquidity that we've been discussing, that things like the liquidity trap will take advantage of, okay? So let's just go ahead and think about that here. And this leads us into our conversation of the macro setup. Now, when we dive into other markets, right, like equities, more risk-on markets, while we don't see as much euphoria over the past couple of days as crypto, we're not setting any new relative highs, equities have made a serious move since back in December, really since the start of the new year. The NASDAQ, as well as the S&P 500 and the Dow Jones, have all held up relatively well. Predominantly, though, the high beta risk-on stocks in the NASDAQ, specifically the FANG stocks, with Meta making the 25% gap up after earnings, all types of big tech plays finally making those kind of Goldilocks rallies as people are starting to be convinced, yet again, for the third, fifth, seventh time, that this is the end of the bear market. This is the beginning of a new bull market. It's the same mantra we're seeing here in the risk-on assets. As, again, the NASDAQ has gotten above the 200-day moving average, a lot of people are convinced that we are over with the bear market. But if you're watching the NASDAQ, if you're watching Bitcoin, your perspective can be a bit siloed. What I like to do here on the channel, in order to always keep a balance of how I'm viewing things when it comes to my trading strategy, I like to follow the more mature markets. I like to follow the markets that are sending very clear signals about what the Fed is going to do, where inflation is heading, and where large-scale enterprise and institutional investors are parking not just millions, but billions and potentially trillions of dollars. I want to know where those money flows are going so I can know which assets to be in and most especially which assets to not be in, which assets are going to see a liquidity net outflow. Essentially, there's going to be more sellers than buyers. Well, if you take a look at the NASDAQ and Bitcoin, you see that they do not buy what the Fed is saying. They do not believe that the Fed is going to continue tightening, as they've stated in prior meetings, that the narrative we heard back in August of 2022 is completely long gone. The Fed is going to go for a soft landing, it's going to go for a pivot, whatever narrative there is out there. Well, let's go ahead and take a look at what every single other market indicator is telling us outside of equities and crypto. Gold and silver have gotten absolutely crushed since the FOMC meeting on February 2nd. Gold has moved down from $1,950 all the way down to $1,823 an ounce. I've heard little to no crypto influencers talking about this. This is a major rejection right at the moment when a lot of people thought gold would follow through and again get back up towards its previous resistance range that it's tested 2 times already in the past. We have collapsed over the past few weeks. Now, why is this a signal here that the Fed is not done with its job? Well, because the dollar and gold are at odds with one another. The less the Fed has a capability to fight inflation and inflation gets worse, well, gold is going to be moving higher here as people lose trust in the dollar and the ability for the federal government to be able to meet to those ends, be able to get control of inflation back into the equation. That is the reason gold is moving lower here. It is a sign that the Fed is going to continue raising interest rates. And if you don't believe me, take a look at the dollar index and its comparative performance since during that same period of time on February 2nd versus other global currencies. The DXY has moved up from around 100.8 all the way to 104.4. It has made a substantial move in the month of February, the biggest upward move since back during the correction that started back during November. It is now pushing back up into its 200-day and heading well towards our short-term target we talked about on the channel and in the Dash report. This is another sign that the Fed is going to start getting more aggressive. And this is in an environment, mind you, where the ECB the Bank of Japan, the Bank of England, and the People's Bank of China, all major central banks of the world are starting to lean more hawkish. Not all of them, but the majority of Western central banks are continuing to lean more hawkish. So they're raising at not just 25 basis points, but 50 basis points. So if the dollar is starting to move higher here, which is correlated and tied into the actions of the Fed, or the Federal Reserve, what does that tell you here? Are we at our peak rate here for rate hikes? Have we reached our target rate for the Fed, or do we have a ways to go? I'm going to be talking about that as we go throughout the conversation here, guys, because not only does the dollar index signal it, not only does gold signal it, but the US 30-year yield is signaling as well. All bond yields have been ticking higher time and time again, which is showcasing right now that the market is taking into account what the Fed is going to do when we're talking about the bond market and currency markets, which trade in a much more mature fashion and in alignment with what the Fed is actually going to do, not with the hopes and dreams of equity markets or crypto markets, which are made up of a much larger retail audience. You do not have retail traders trading bonds. You do not have retail traders really making the major bets and moves within Forex markets. This is all driven by Fed monetary policy expectations. And we'll talk about that as we go through the conversation. There's a big caveat that a lot of people are not considering. And again, we can see here, if we take a look at some of the equity plays for crypto, like MicroStrategy, we are in, again, if we divide it by Bitcoin, one of the consistent ranges of resistance where time and time again, these plays start to move lower and signaled Bitcoin tops, where equity started trading at a certain premium versus the underlying moves of their assets that they're exposed to. In the case of MicroStrategy and Coinbase, we've been talking about this stuff during the Dash report. We got a major move on the VIX, so we told people not to fight. And the VIX came down here into the near 5-year long, more than 5-year long support channel that it's been building up. Time and time again, this has been your sign to go short on equities or to at least take profits on positions in the market when it comes to relief rallies or moves to the upside. But time and time again, people don't watch these kind of indicators. Most traders out there are too focused in on the day-to-day moves. And what's that going to leave you with? Well, it's going to leave you getting caught in positions like Tesla that are trading at twice the valuation they were at just a little over a month than a month ago. It is now doubled in valuation, and now it's pressing up towards its 200-day, each and every time facing resistance. Is this really a trade you want to get caught in? I'm not negative on Tesla. Tesla is a really cool company in many ways, but I'm not going to lie to you guys and try to get you to FOMO in to what is clearly a relief rally. We haven't even seen if these companies can hold on their 200-week to confirm that they're in a bull market. Are really the high growth, high beta stocks that won over the last decade during an era of easy money going to be the ones that win out during an era of difficult times, an era of tightened monetary policy? And again, we've talked about this again in the macro data. We've gotten the Philadelphia Fed Manufacturing Index just came out the other day, and we can see that we've had our worst month, a over 20% decline in orders, the biggest decline we had since back during the pandemic. A clear, decisive trend where month by month by month, the clear, real economic data is signaling some very worrying signs. I'm not here just trying to be a perma-bear, guys. We were bullish over the lighter part of the last decade. And there's plenty of people out there who are optimistic and euphoria, still are maintaining euphoria. There's a ton of people telling you to use their referral links, go out there and trade every single move, chase the rally. We're not here to do that. We don't have any incentive to do that. I want to be honest with you guys. We've been here for the last 5 years because of that focus of being honest. I'm not going to tell you one thing and do another. We've been in cash. And if anything, we're betting long on certain commodities and short equities. We believe that inflation is sticky here on the channel, right? And of course, on top of that as well, right? If people don't believe inflation is still hurting the general public, household debt just hit a record of $16.9 trillion. Now, that alone already is quite concerning, but when you understand the ramifications of what we saw in the last quarter, that is what really sends the clear signal here. This should be the headline. Credit card balances in the United States increased nearly 6.6% to $986 billion during the quarter. This is the highest quarterly growth on record since 1999. And from here, we can already start seeing the same kind of euphoric, late-stage signs of a bubble. When people no longer have the financial wealth to keep spending like they're spending, and they need to rely on credit, which they are eventually going to either have to pay or default on, this is going to cause a massive wave of defaults and therefore economic ramifications where there are more layoffs, there is less consumer spending, and therefore no crutch that the end business cycle can depend on. There is no more liquidity. It will have dried up at that point, and that will lead us towards the inevitable step, i.e. lower inflation as interest rates go higher and a real economic recession. And do you think that people are going to be chasing to buy Bitcoin during an economic recession when people are getting laid off? We are seeing record amounts of layoffs. We are seeing a huge decline in manufacturing data and a huge ramp up in credit card debt. This is all the fundamental signs that unfortunately people just simply, or at least the bull market rally that we've seen so far, the bull market relief rally, or bear market relief rally, I'm getting my lingo wrong, is clearly showcasing that it's just ignoring right now. We can't ignore this data if we're really trying to figure out to trade the broader trend. This is the last piece of data that I want to share with you guys here, and that has to do with the effective federal funds rate. So we had a 25 basis point increase. Jerome Powell, unfortunately, decided to just do a 25 basis point hike in the last FOMC meeting. This left him in a position with the Federal Reserve this month was not only appeasing to, I think, financial assets, but more specifically, it left it in the tailwinds behind the ECB and many other central banks that are continuing to tighten. Well, we've had for a long period of time, we've had this chart, we have not edited the chart whatsoever. Back over the past couple of months, we had projected the Federal Reserve was going to go through this general hiking pace and get up towards a target rate somewhere around 5% to a potential upper band of around 5.5%. Similar in line to where we were back in 2007, in order to have the job done. And this was at a period of time where people were at 5%. You're ridiculous, Nick. We're only going to 4%. We're near the target rate. Each and every relief rally, this is how people thought. And this is why, again, I think we stand out here in the channel that we believe that, again, analyzing history, inflation is sticky. Now, the thing we got to consider here when understanding the federal funds rate, you guys will notice that some stocks have, thrived during this period of time when interest rates are higher, where they've held up quite well. Predominantly those companies on the Dow Jones, defensive plays. And then on the other end of the stick, you have the high beta growth stocks, which are, again, the big tech plays, or more specifically, a lot of the very lacking of cash, so to speak, startups like Carvana and Peloton, which were the poster childs that were able to just burn through capital and focus on growth during 2020 and 2021. Those stocks have been dwindling over the longer trend. And that is due to the fact that, well, during a higher interest rate environment, you have businesses that cannot operate whereas they could back in the past. Businesses that could operate in a 0% interest rate environment get crushed in a 2.5 or 3.5% interest rate environment. And businesses that could survive at a 2% interest rate or 2% federal funds rate will get crushed and go bankrupt when rates go to 4 or 5%. Think what happens, right? When we go through these, these big moves here, these overall expansions of the federal funds rate, right? I want you all to think for a moment. What's going to happen when we get up here towards 5 to 5.25%? Some of you may think that that's not possible, right? It can't be. We're seeing such a strong labor market, right? Why would the Fed need to raise the federal funds rate up there? Well, strong labor market, strong housing prices, all of those are clear signs that the Fed is not done with its job and are signs that inflation is still persistent. Look at food-based commodities. Look at these economic data points that we're talking about here, guys, and you'll see the cost of living is still going up. Inflation has not cooled down. We had a 0.5% month-over-month increase. I don't care if that's what the economists were expecting. Inflation is still at 6-point-something% for the year. And it is not showing any signs of letting up. This is where the scary stuff comes in, guys. Because if you don't believe that we can get there, take a look at the CME Group prediction markets. Not only since back during the FOMC meeting have we seen an uptick here, right? A clear signal that the Fed is going to continue tightening in the next meeting. But on top of that, many people are starting to see as you go throughout the future months, as we go throughout the March meeting, the May meeting, we're starting to see that people are expecting that the target rate as we go throughout the following months into June or July is going to be somewhere within the ballpark of roughly around 5 to 5.75% or 575 basis points. A growing number of participants see that the target rate is even higher than what we expected, what we had on our chart over the past couple of months. Inflation is persistent and sticky, and you need to ask yourself a very important question. Are people going to be chasing Bitcoin or the FANG stocks, the darlings of the last decade, which have been generally making lower highs and lower lows now during a bear market? Do you think they're going to chase that when after the federal funds rate goes up to 5-6%, they can just buy US 30-year treasury notes and make a nice 5-6%? The risk reward starts to become very unfavorable for equities when you have a clear, trustworthy asset like US Treasury notes or other types of government bonds that are paying a solid yield where you don't have to do anything. You don't have to think about which sector is going to lead. You don't have to think about the underlying price so much. You need to think about, hey, what's my average annual yield? Well, that's what the smart money is doing right now. Smart money will adapt that. They will take advantage of the yield on these bonds as they continue to move higher. Need not look any further than the clear chart that signals that we are in a different period of time. It's going to take so many people, unfortunately, and I hate to say it, guys, but it is the reality of it here. We are in a different decade or different era of monetary policy. Gone are the days of easy money and excess financialization that played out as far back as the 80s from when we saw a decline in interest rates from their peak. I'm not saying we're here in the same position we were in the 70s. Everything is different. There's nuance. History doesn't repeat, but it certainly rhymes. And we are seeing the repeated patterns of history play out here. And it's something you got to be prepared for. We got to get out of this mindset of buy the dip, buy the dip. We now instead need to think in the direction of where the Fed's going. Sell the relief rally. Take advantage of the euphoria and optimism, because that is a sign that there is still excess liquidity in the system. The Fed has not done its job yet. There's 2 times the money supply that we had prior. That is going to lead to ramifications until the Federal Reserve does its job. Now, at the same time, guys, I'm not here to say that there isn't projects out there that are exciting. I'm not saying that there aren't projects that I'm exposed to in the crypto space. While we are the vast majority in cash, we do have some plays we have exposure to in the crypto space that are building, that have the ability and the fundamentals to be able to stomach these periods of time, irrespective of whether or not we have another bull market or if we are still, persistent within a bear market, right? It doesn't matter. The key thing here is that we want to find the projects that have the real potential to grow their ecosystem, grow their community, and are building right now during this bear market. And one of those projects that has got me really excited is one of our long-term partners, Kryxivia. This is one of the few projects, I'll make it very honest and clear with you guys here, that I have exposure to here during this bear market with my own capital. I bought on the spot market, didn't get in some early stage round. I bought this project when it comes to the native token, and I love playing the game personally. It's a really good game to play if you guys like MMORPGs, and they have a huge range of updates to talk about here in today's video. Not only has Kryxivia pushed out a major set of bug fixes that have helped the core game to be much smoother and allow for a much better user experience, but on top of that, Kryxivia has been having some major developments when it comes to the upcoming NFT marketplace, where you'll be able to actually sell in-game items or list them on the open marketplace, where, for example, if you earn certain armor pieces, certain types of metals or materials, as well as different types of gems and items that have a real market value for people who love playing the game and want to boost their character, well, this is a way where you can monetize for your attention and your time playing the game. Not only do you earn KXS token when you complete quests and different types of efforts within the game, but on top of that, you're able to earn and build different types of items, which then you can start to mint as NFTs on the Polygon network. This is really exciting stuff, guys. There's already a lot of really exciting traction going on the current OpenSea market, but I'm really excited to see the team push out their own native marketplace and see just how much people are going to start to use this when it comes to minting in-game NFTs and actually being able to monetize their attention within the game. Not to mention, it's important to note that Kryxivia is just a really fun game, and the range of items that have come out since the launch of the beta is massive. But this is just one line item. On top of that, if you're more of a passive individual, maybe you're not so much a big gamer, but you really see the potential in Kryxivia, well, if you're a KXS holder like I am, then you should definitely get excited for the upcoming staking mechanism and staking dashboard that's going to be launching for KXS. This is a way where you guys will be able to take, excuse me, your KXA tokens more specifically, where you'll be able to stake KXA, the native utility and governance token for Kryxivia, and you'll be able to start getting staking rewards on it. So there's a lot brewing behind the scenes here for this project. Things are not slowing up here during this bear market. Again, while we may be generally negative on the overall trend of the market, there are going to be some plays, market leaders that showcase themselves beforehand. And we can see that with Kryxivia. Kryxivia has been making some big moves over the past couple of months, generally setting at higher lows, higher highs, and trending higher. And I think it has to do with the fact that the team has already seen massive amounts of daily active users. As we've talked about in the channel, there's been a huge community starting to grow around Kryxivia. I go into the game playing it from time to time, and what's so cool is that you just see a whole network of individuals playing the game. Not to mention, they've been able to score some really awesome individuals to help contribute in towards building the ecosystem and getting people excited for the game, and also getting educated on how to get started in Kryxivia. And one of those is Bumble. Now, if you guys haven't met Bumble yet, he's a well-known gamer, both in the mobile space as well as the general Twitch community. And I got to play with Bumble back a couple of weeks ago on a live stream on Twitch, which we talked about here on the channel. And I have to say, not only is Bumble an incredible guy, he's really funny, and he's really knowledgeable on Kryxivia, considering how early stage the beta launch has been. You know, it's just been really a little over, I think, a month now, and he's gotten so far in the progression of the game. But he did a really great tutorial on how to start your journey in Kryxivia, which I highly recommend you guys check out on the actual official Kryxivia MMORPG YouTube page. You guys can go ahead and subscribe to them like I am. But on top of that, we had a really good time getting to game, and there's a whole range of different community members out there that are already creating content on the game. But if you guys are interested, I highly recommend you guys check out the YouTube channel. And again, one thing I thought that would be really interesting to mention and just kind of showcase is some of the gameplay where me and Bumble were going through. He was carrying me a lot of the way because he's progressed so far in the game. He was showing me some of the different dungeons. We fought against some of the different bosses. And, well, I'll go ahead and just showcase some of that footage to you guys so you can get a feel for the game and see whether or not it could be of interest to you. That being said, everyone, let's go ahead and dive into the footage. If you guys enjoyed the video, drop a like, and let's go ahead and end off with some fun gameplay footage.
It's gonna happen again. That one guy will be able to carry a non-geared Melcino. It's gonna probably take 6 months. It's gonna take a long time. Oh
no, the bear is totally focused on it. No.
I was hitting the bear. What? Devs, can you see this? I was aggroing that bear, bro. What? Okay, let's leave it.
Devs, do something. Oh no, no, dude, no.
No, I'm hitting the bear. Oh, I got you. Oh my god.
I don't know. Wait. I think I'm walking too fast this time. I need to keep a distance.
I was sprinting to you. I was like, oh my god, not today, not today, bear. You're not doing that. Oh my god.
At this point, I think I need to change my gamer tag from Notorious Dashington to basically Backpack because you're just carrying me all the way.
Backpack.
All right. Let's get it.
All right, we got this. We got this.
There we go. I'm keeping any of my like.
I need to buy some Red Bull in the store. No! Oh!
Oh!
Oh, that was so close, brother.
Oh, come on, dude.
Oh my god, we're making history. If this boss, I want a achievement, devs. If you guys are seeing this right now, you're gonna give me an achievement for making this.
Alright, let's see here. Almost a third of the way down. Or like almost down to a third.
Yeah.
Oh my gosh. You got this, man.
So much damage right now. So much damage. Ooh!
Look at him go. No, 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 no.
Nah! I don't have mana, bro. I don't have mana. No.
Oh, no.
No way. No way I'm gonna die.
She's persistent.
No way.
Oh, so close. So just curious, did you load up on as much potions as you could get, or?
Basically it takes a lot of time to get those potions, so I saved it for, I was saving it for the tournament because the tournament was gonna be, there was a tournament today, and extra mana is needed when you're gonna be doing some crazy fights.
When I see that, like the damage field like turning my direction, I was like, oh, I'm bouncing. To get started with Kryxivia, check out the link down below in the description and join one of the fastest growing play-to-earn games within the entire crypto ecosystem.